What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Ethereum. Now, before we jump into the analysis, just bringing you guys an update on the Bitcoin ETF news. This article came out on January 3rd, but was updated just yesterday. Goldman Sachs is actively looking to partner up with either BlackRock or Grayscale to be a Bitcoin ETF AP, which stands for Authorized Participant. As explained in the last Bitcoin episode, an authorized participant actively manages the Bitcoin ETF by keeping the Bitcoin ETF's market price closely aligned to its net asset value. A Bitcoin ETF can have multiple authorized participants, so I definitely expect to see other big financial institutions like Morgan Stanley, Citibank, and Wells Fargo to become authorized participants sooner than later. We spoke about the domino effect of financial institutions rolling into crypto back in episode 9 of our Coinbase series. It doesn't matter if the executives at these financial institutions don't like crypto, like Jamie Dimon, a notorious Bitcoin hater who so happens to be the CEO of JP Morgan & Chase. If these financial institutions want to stay relevant, if their high net worth clients want exposure to crypto, all the big financial institutions will eventually come in droves into the crypto world. Goldman Sachs is not a no-name financial institution. Goldman Sachs is an industry leader when it comes to investment banking. Just because I'm in the mood to dig on Jamie Dimon some more, this article by CoinDesk does a fantastic job illustrating our points back in the last Bitcoin episode, where Jamie Dimon just a few weeks ago spoke in front of Congress saying that all cryptocurrencies, including Bitcoin, should be banned immediately. Fast forward to today, JP Morgan is now partnering up with BlackRock to become an authorized participant for the upcoming BlackRock Bitcoin ETF. You know, if you actually zoom in on this guy's face, you can actually see his nose growing through your screen. Okay, moving into the charts, the analysis really hasn't changed for weeks now. We have an established impulse off the October lows that hit our white trend-based fib extension targets. And we've been trading in a wave 2 retracement in the form of an expanded flat correction. We can measure the target of this wave 2 retracement by taking a 3-point trend-based fib extension. So a common target for an expanded flat correction is the 1.618 trend-based fib extension, which is roughly at $2,000. This overlaps with our blue Fibonacci retracement support area that spans between $1,823 and $2,040. So that's some interesting confluence. The advice, which is not financial advice, remains consistent. Take some profits off the table or hold. We still believe the worst decision at the moment is to FOMO your life savings into crypto. Moving into some indicators, starting with the TD sequential indicator. The TD sequential indicator is printing a 9-count sell signal. The last time the TD sequential indicator printed a 9-count sell signal was back in May of 2023. Similar to May, Ethereum was printing this 9-count sell signal, tagging the same white liquidity trend line. Now, these 9-count signals have been quite effective in predicting tops and bottoms. As you can see, back in September of 2023, the 9-count buy signal almost marked the local bottom. And finally, the 9-count buy signal back in June of 2022 marked the bear market bottom. So I'd be a bit cautious opening leveraged long positions here on Ethereum with a 9-count sell signal printing on the white liquidity trend line. Shifting gears to the RSI indicator, we can see bearish divergence on the RSI, where Ethereum is making a higher high, but the RSI is printing a lower high. This divergence can be magnified on the daily time frame, where Ethereum is making a series of higher highs, but the RSI is printing a series of lower highs. This is bearish. Moving into the momentum and money flow indicator, the momentum waves are in blue, and the money flow waves are in red and green. As you can see, as Ethereum is making higher highs, both the momentum and money flow waves are dropping lower and lower. In fact, the positive money flow in green just flipped negative into the red. So I wonder if we're about to see a major capitulation move on the horizon. Shifting gears into Tether dominance, just a quick overview. When Tether dominance goes up, Bitcoin goes down, and when Tether dominance goes down, Bitcoin goes up. The last time I updated this chart was back in the last Bitcoin episode when we talked about the daily hammer forming on Tether dominance. Since then, Tether dominance has had a gigantic pump towards the upside, which led to Bitcoin nosediving 10% in just a few minutes. Since then, Tether dominance has retraced back to the white 1-to-1 trend-based fib extension support area. Now, the white trend-based fib extension support area is not the only support level located here. As you can see, Tether dominance is close to tagging our white demand trend line. The critical support level at 5.24% as well as the 200 weekly moving average in red. Because Tether dominance is so close to these cluster of support levels, we do favor upside on Tether dominance, which should lead to a correction in the cryptocurrency markets. Now, moving into the weekly time frame, we can see that the weekly RSI is at the lowest point ever in the chart's history. In fact, Tether dominance has never had an oversold reading on the weekly time frame until now. The last time the weekly RSI was this low was back in February of 2021. If you remember, this was back when everyone was hyping the Coinbase IPO, Tesla just bought $1.5 billion worth of Bitcoin, and Bitcoin is going to $1 million. Fast forward to today, the narrative is surrounding the Bitcoin ETF, and once again, Bitcoin is supposedly going to $1 million. The euphoria surrounding the cryptocurrency markets today is very similar to the euphoria I saw back in 2021. Now, back in 2021, when Tether dominance broke out, Bitcoin ended up crashing over 50%. Now, we don't believe Bitcoin is going to crash 50% from here, but we do believe a rug pull is definitely on the horizon. We talked about the pre-halving correction in the last Bitcoin episode. Make sure to go check that video out. Be careful buying crypto up here. Be fearful when others are greedy. Closing things off with some regression, just a quick overview. The red region represents Ethereum's overvaluation. The green region represents Ethereum's undervaluation. And the white region represents Ethereum's despair region. Ethereum's despair region this week spans anywhere between $1,325 to $1,853. The reason why the despair region is important is because every time that Ethereum has entered the despair region is a once-in-a-lifetime buying opportunity. Because every time that Ethereum leaves the despair region, Ethereum has always managed to go to new all-time highs. So far in this market cycle, Ethereum has only spent 2 weeks inside the despair region, as opposed to in previous market cycles, where Ethereum spent 5 weeks in the despair region back in 2020 and 18 weeks in the despair region back in 2016. So if the pre-halving correction we talked about in the last Bitcoin episode comes to fruition, Ethereum should re-enter the despair region. If you're well positioned in crypto, like I said, just sit tight or lock in some profits. If you don't have a position in crypto, I wouldn't FOMO my life savings into crypto right now. If you don't have a position in crypto, I would just adopt a small weekly dollar cost averaging plan. Okay, so that's my analysis on Ethereum for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.